By the end of this video, you'll have an exact step-by-step strategy to backtest using ICT concepts. So now we're on the charts and I'm going to walk you through exactly everything you need to know to implement the strategy and to start backtesting it. And yes, I will be going on TradingView to explain some things. As you can see, TradingView is right here. So it's there for me to explain. And I'm going to be looking at this, which I've just made for you guys. So I'll be going through TradingView and I'll also be showing you 2 trade examples with this strategy. One trade example was a winner I took and the other one should have been a winner, but I kind of missed the trade and it missed my entry basically, but that's on me. But anyway, you want to hear the strategy, so let's go through it. The time frames you will need are the daily, the 45-minute, the 15-minute, and these 2 are going to be your entry time frames, the 5-minute and your 1-minute. These are going to be your LTFs, or the lower time frames that you're going to be entering from. Okay, now the ICT concepts you will need for this approach are the daily bias. Well, these aren't really that concepts. Some are just, things like Asian session, but you get what I'm trying to say. Daily bias, Asian session, power of 3, London session, swing highs and swing lows. You should know how to identify swing highs and swing lows, but if you don't, we'll cover that in this video as well. Fair value gaps, imbalances, and basically just how to use the Fibonacci with the right settings and everything. Okay, so now that we've got that out of the way, I want to tell you where you can trade this strategy. I personally trade it on Euro USD and GBP USD or cable. So these are the 2 you want to try. If you're a fresh beginner, I would suggest you start with Euro USD. That's a very beginner friendly one. And then when you collect data on it, you can potentially move to GBP USD. But to start off with, I would suggest start with Euro dollar. So step 1 is we identify our daily bias. But now you might be asking, Arjun, what is the daily bias? How do we identify it and how do we go through it? So I'm not going to just leave you like that and just say identify the daily bias. I'm going to actually tell you how to find it out. And that's when we go on TradingView. So daily bias, number 1 is a daily bias. So we go on the daily time frame right here. So now we're on the daily time frame. All the daily bias is asking is, are we more likely to target the most recent swing high? The most recent high, daily high, or the most recent daily low? Previous daily high or daily low. So when the next candle forms on the day, the question is, are we more likely to target the high or are we more likely to target the previous low? So daily bias isn't asking for us to zoom out and say, okay, are we going to go all the way to this high over here? Or are we going to go all the way around here? No, it's not asking any of that. All it's asking is, in the short term, where are we more likely to go? Because we are intraday traders. We don't care if it's trying to go up here or if it's going to try going down here. All we want is the nearest area of liquidity, low-hanging fruit, and that is what we want to target. So that is the daily bias, but how do we actually figure it out? So this is where swing highs and swing lows come into play. So for our daily bias, all we're going to be looking for is very, very simple market structure, and we're going to be identifying our swing highs and our swing lows. Now, if you don't know what swing highs and swing lows are, I'll explain that to you. Let me just change the color of this tool. All that a swing high is when we have a candle like this, candle in the middle, and then a candle like this. Now, what the main aim of this is we want to have our swing high in the middle candle, and we want a lower high to the left of it, and we want a lower high to the right of it. So as you can see, this high right here is lower than this one. Okay, it's lower. If I just explain that a bit better, this is our swing high. We have a lower high to the left, lower high to the right. Okay, so it basically makes this sort of arch formation. This is what I tell everyone I teach this to, all of my students. Just have this arching sort of formation for a swing high. Now a swing low is literally the opposite. We want to have an arching position on this low. So we want a higher low to the left and we want a higher low to the right of this candle, right like this. Okay, so that is our swing highs and swing lows. And to identify that with real examples, if we just look on here, this candle right here is a swing high. Now, why, you might be asking, well, if we look to the left, the candle high is lower. If we look to the right, the candle high is also lower. So this is a swing high. Swing lows would be something like this, where we have a higher low to the left and a high low to the right of it. So that is a swing high, swing low. So Now that we know that and that's out of the way, all we want to know is where is the most recent swing highs and most recent swing lows. And the moment a swing high or a swing low gets broken with a body closure, then we switch our bias. So in this example, the swing high has been broken, so our daily bias is bullish. It's as simple as that. Don't overcomplicate it. I used to overcomplicate it, and this just made it so simple, removed all the discretion, all of that stuff, and made my life easier, okay? Never talked this much. If the swing low, the most recent swing low does get broken, which it does here with a body closure, remember that, body closure, then and only then am I switching my daily bias to bearish. This is a swing low right here in this example, but a new swing low might actually form. So in this example, we have a new swing low right there. Now, if this happens and then this swing low gets broken, then I switch my daily bias to bearish as well. So I don't have to wait for this swing low. If a new swing low forms, then I'm going to be switching to bearish. That's the theory out of the way. Now let's look at the actual examples. Right now, if I was to say what we are, we can see we had a low, which was broken right there with this body. After that, have we had any swing high breaks? No, we had this swing high, which hasn't been broken through. So this is our swing high, which hasn't been broken through. Hence, our daily bias is actually bearish. Now, this is that swing high. We've also have a new recent swing high, which is right here. This is the most recent swing high. So my target would be here. I'll be targeting that price is going to go down here for GBP USD. And my invalidation, or the point at which I'm going to switch to bullish, is if this swing high right there gets broken with a body closure. Now, if that doesn't happen, I'm going to be bearish. If it does happen, I'm going to be bullish. It's very, very black and white, very, very mechanical. And that's the daily bias out of the way. We're bullish. We're going to be looking for buys. If our daily bias is bearish, we are going to be looking for, as you guessed, sells. So knowing that, we can move on to step 2, and that is to identify our POIs, or points of interest. Now, points of interest are basically things like supply zone, demand zones, and fair value gaps. Now, this is going to be an extremely long video if I go through each one of them and little minor details about each one of them. So I'm guessing that you already have some sort of understanding about these things. If you don't, then make sure to comment it down below. I'll make a completely separate video on anything you've found a bit difficult to grasp in this video. But essentially, if you have a somewhat understanding of these things, fair value gaps are these imbalances, a 3-candle pattern, and supply zones are basically zones where there was a last bit of buying before a drastic sell. So this would be an example of a supply zone, last buying pressure before a strong down move, and then a strong demand zone would be something like this, where it's a strong last bit of selling before we get a large buy move. Now, if we just look at some examples on the 15-minute, we can see these supply zones and demand zones actually working. Also, we can see fair value gaps. So if we just go to here, this is a trade I took actually, and this reacted to perfectly a fair value gap, if I remember. So if we look here, perfect, there we go. Fair value gap from here to there. If we just extend that out, we tapped in right here during our session timings, and then we just plummeted down. So this would be an example of a fair value gap, and this is how it literally reacts and then goes down. Okay, so we want to see our points of interest. We want to identify these points of interest so we know that we're actually trading from a logical place. Now, if you want to go extremely mechanical, then you can skip this step, go on straight to our step 3, which is to mark out our Asian session. Now, the Asian session is going to be midnight to 6 a.m. UK time. Excuse me 1 second. Midnight to 6 a.m. We're going to drop down to the 15-minute time frame, and we're going to be marking out this timing. So as you can see from the daily, I've gone down to the 15-minute time frame. This is what it's going to be looking like. And now for the session indicator, this is what you can copy. Asian range by Nico or Nico 948. And these are my settings. You can change the color to whatever you want. And these are my settings as such. So you can copy that screenshot, pause the video, come back to it and copy these settings so your trading view looks exactly like mine. But now that that is out of the way, we can go on to our step 3, which is mark out Asian session, which we've done with the indicator. And then we go on to marking out our Asian high and our Asian low. So if we look at the example of which I actually took the trade on, we would have marked out our Asian high, which is from midnight, somewhere there, midnight all the way to 6 a.m. We want to find the highest point in this shaded area and the lowest point. So in this example, the lowest point would be right here. I'll make that dark. This would be our Asian low. and our highest point would be 6, so this would be being the Asian high. These 2 points. So we have our Asian high and Asian low. Now, to explain the strategy in very simple terms, we are going to be capitalizing on the power of 3. As I mentioned here, the power of 3. Now, to keep it simple, I've made a complete video on the power of 3, so make sure to go check that out if you don't understand it. But the power of 3, all it's basically saying is that we accumulate at a certain time, which usually turns out to be the Asian session. Now, if we're bearish, what we usually do is we take out the highest point in the session, because there's liquidity there. We take out the highest point in the session right there, and then we usually expand to the downside. And this expansion is what we are trying to catch in the strategy. Not the whole thing, just a small part of it, to be very mechanical and systematic, because we don't want to get too greedy. So we're looking for Asian high sweep and then an entry model down below. And don't worry, I'm going to be walking you through the entry model in this video as well. So no need to worry. Everything is going to be covered in this video. So it might be a long video. I don't even know how long this is going to be. But if it's very long, then all I'm going to say is that make sure to watch it over and over again, replay it, come back to it, make notes, because this is literally going to be the best video on YouTube, I'm telling you. Asian high, Asian low is marked out. Our next point. So if our bullish daily bias, well, if our daily bias is bullish, we are going to be waiting for the Asian low to be swept, and then we're going to be looking for our entry model. Now, when I say Asian low being swept, all I mean is that in our session timings, kill zone, which I'll get to, we are going to be looking for the lowest point, the Asian low, to get swept. We want price to go below that Asian low within our timings. If our daily bias is bearish, we are going to be waiting for the Asian high to be swept, and then we're going to be looking for an entry. As you can see here, so in this case, I was bearish on this day, so I waited for the Asian high to get swept, which it did at 7 o'clock or 7:15. We also tapped into, well, there was that fair value gap, which I showed you in the 45-minute, something there. Tapped into it, then I dropped down to the lower time frames for my entry model. We got the confirmation and I took the trade. Now let's go on to step 4. Look for our entry model. So far, we have covered all of these things. We've looked for our daily bias, which I've told you how to do. We've identified that. Then we've identified POIs, if there are any POIs on the 45-minute time frame or on the 15-minute time frame. Then we drop down to the 15-minute time frame right there. We mark out our Asian session, which the indicator does for you. We mark out the Asian high and the Asian low. Now that that's done, we know that if we're bullish, we're going to look for this. If we're bearish, we're going to be looking for this. I should actually make this red if we're bearish. And now we look for our entry model. Now this can be done on the one or where did it go? Yeah, it can be done on the 1 or I don't know where it's gone. On the 1 minute or the 5-minute time frame. Now, if you're quite busy, 5-minute would be better. If you're on the chart, 1 minute would be better, but there's pros and cons to both. Sometimes on the 1 minute you get very, very precise entries, but then sometimes on the 5-minute you just don't get the entry at all, and then you just miss price. So this depends on your back testing, but I would suggest 1 minute or 5-minute. Now our session timing is our kill zone, and the kill zone is 7 a.m. to 10 a.m. UK time. So what is like a good rule to do? Mark out your 7 a.m. to your 10 a.m. So this, between this window, this shaded area is where we are going to be looking for our entry model every day. After this, you can leave because that's done. You don't need to look for New York session. You don't need to look for like the London lull session where nothing's happening. You want to be looking for this time window, 7 a.m. to 10 a.m. and this is where you're going to be looking for your trade opportunity. So now that we've got that out of the way as well, what are we actually looking for, you might be asking? Well, we are looking for exactly this. We're going to be looking for an Asian sweep, so a sweep of Asian low or high. I've actually forgot to mention we're going to be looking for a London sweep, which basically just means at 7 a.m. we want to see a sweep of liquidity, whether it be the low or the high. We want to see a sweep of liquidity at 7 a.m. Then we want to see a break of structure on the lower time frames. We're going to see an entry pullback at 50% for our limit order. Stop loss has to be a minimum of 5 pips, nothing less than that. Usually it's around, I'll say 7 to 10 pips. And then our take profit is going to be at a 1 to 2 risk to reward ratio. If we just go over that again, we're going to be looking for a liquidity sweep at 7 a.m. So in this example, as you can see, this was our Asian high. I'll just delete these lines. This was swept after 7 o'clock. So this is perfect. Asian high gets swept after 7 o'clock, and then we get the entry model down. Now, if we look for our entry model, this is exactly what we are looking for. We are looking for Asian high to be swept, number one. Let's imagine this is the Asian high. Now, when Asian high gets swept in our kill zone, we're going to be looking for the entry model. And for the entry model, we're going to be looking for a simple market structure shift, which would look something like this. We're going to be looking for a swing low to be broken. Remember what swing high, swing lows were? We're going to be looking for the swing low to be broken. Then we're going to be looking for a retracement to the EQ of this down leg, which broke the swing low. We're going to enter at an EQ level, short position there, stop loss there, target a simple 1 to 2 risk to reward, just like that. This is literally the entry model. I think I'm going to sneeze. Never mind. So this is the entry model. Swing low gets broken, and ideally you want to see imbalances, but I'm going to go through the bonus section with you, which gives you some high probability settings for you to try out and backtest, so stay tuned for that. But this is the entry model in a nutshell. Break of market structure, Asian high sweep, retracement into this area. So now if we actually go to this entry model right here, this was the trade I took. I posted this on my Instagram as well, and I believe a trade recap of this will be coming out. Essentially, remember there was a 45-minute POI there. If we look here, this was on the 5-minute I took it. There's a swing low right here. None of these are swing lows coming down. This is the most recent swing low. If I just kind of draw it with these dots, just eyeballing it, we have a low, swing high. Now this is not a swing low, okay, because swing low needs to have a higher low to the left, higher low to the right. So the swing high becomes there. We come down and we break this swing low. Now this was with a wick, which for the entry model, it works out, to be fair, sometimes. Now all we do after that is from the high to the low, draw the fib, perfectly taps into our 50% area with multiple taps. So you had many opportunities to get into this position. It's also between our timings. So the break of structure was at 8 a.m. So it's between the 7 a.m. to 10 a.m. It's actually a bit of a silver bullet timing. And then we get tagged in our session timing as well. Stop loss above there. And you can give some breathing room if you want. I think I had 13 pips and then a 1 to 2. Now a bonus tip, which I would like to give you right now, is take your positions off at 12. Don't hold your position on after 12, because as you can see, 12 o'clock just had a spike. There was news on this day as well, but usually it's very unlikely that it just keeps going on until 12. It can happen, but I would say most of the time the main move in London session happens and finishes around 12. And at 12, it starts to reverse, but I would suggest just take it off at 12. We pretty much have the whole strategy summed up in a nutshell. Now, if we go to bonus sections, these are some things which you can test to potentially increase your win rate. So midnight open price, I've mentioned this quite a bit in my previous videos. Midnight open price is basically just the price at midnight. It should be 5 a.m. UK time, because midnight open New York times are around there. Whatever the opening price is, just draw a line. Now the general rule of thumb is that high probability sell conditions will happen in the top half of this midnight open price, and high probability buying opportunities will happen below the midnight opening price. So if your entry limit is below and you're buying, think of it as a high probability trade. If you're selling and your entry is above this midnight open price, then think of that as a high probability trade as well. Taps into POI. Now this is what I mentioned before. If you want a very, very simple mechanical setup, all you have to do, identify your daily bias, which was mechanical anyway, and then all you want to do is wait for Asian sweep and look for your entry model. That's a very simple mechanical. Something which does increase win rate is if you look for high time frame points of interest, imbalances, fair value gaps, demand supply, also high time frame liquidity sweeps. So that is something which will definitely increase your win rate. Breaks of structure with a body or wick. As you know, this example was a break of structure with a wick close. Now, body closes are obviously way better, as I mentioned, for the daily bias, but with your entry model, you will sort of see when you backtest that wicks do work. But the main thing I would say, the biggest takeaway, is when you're looking for a entry model on the lower time frames, make sure to have the break of structure with imbalances. Now, what I mean by this was our break of structure in this entry model. Now, as you can see, in this leg coming down, we have an imbalance there. We have an imbalance there. And yeah, those are the two imbalances. So if this leg has imbalances coming down, it's also a very, very high probability setup. This is just what I've tested from my back testing. One more thing is that if you want me to go through a back testing session with you on YouTube, I do a video of literally me going bar by bar, back testing the strategy. Let me know down in the comments below. I will make that for you ASAP. Now I'm going to just show you the trade which I missed. So we had Asian low right there. I was bullish, so I wanted to see either a higher time frame liquidity sweep, or I wanted to see a higher time frame POI tap. So we had a liquidity sweep right there. Also, we tapped into this demand zone, which caused this large move up. So I was very happy with this POI selection. Then when we came down, swept Asian low, I was looking for my 1 minute entry model. So if we zoom in here, the entry model is very, very simple. Low, keep going lower. Now I want to see the most recent swing high being broken, which is this. That gets broken right, make the stick right there. Do we have imbalances to support this trade? Yes, we do. One imbalance right there, and I believe there's a very, very small balance there as well, but this is the main imbalance. Now, how do we enter? We get our fib setting out, and we go from here to there, and this is what I mean. My entry was right here, and I actually posted this on my Instagram, so you can go check that out. My stops were around there. This was my entry, and as you can see, it came very, very close, but did not tag me in. A lesson I've learned from this is just to, market execute from next time onwards when it's like literally this close. But then as you can see, the 1 to 2 would have been hit very, very quickly. Literally minimal drawdown, 1 to 2 would have been hit. And yeah, you could have targeted 1 to 3, 1 to 4, whatever, but 1 to 2, very, very simple. And that is basically the trading plan. I hope you got a ton of value from it, and I hope you can actually implement and backtest the strategy. And please let me know how you find the results down in the comments below. So that's all for today. I will see you in next Wednesday's video. Happy trading, stay safe, and peace.